is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you, sir?
I'm doing great, man. How you been?
Oh, can't really complain. First of all, I wanted to thank you for the bargain re-up on the gold report. I've been getting it for quite a while, and for a couple of years there, it was like an insurance policy. I'd say, oh, I got to buy gold, and the gold report would say, oh, no, not yet. And lately, it's like a winning lottery ticket. So it's working really well all around.
I appreciate the feedback, Marty. Thank you.
Now, Tom O'Brien.
Good day, Money Masters and Treasure Hunters. Welcome to the June 9th magnificent Monday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom. I'm the morning anchor here at TFNN. I get things kicked off for us each day from 9 to 11 o'clock. Also, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I'm filling in for Tom for the afternoon, and I am grateful for your presence here today, folks. My outcome this evening is to teach you how to master the tools for trading, and that includes the tools of the mind. Because when we master the tools of the mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD. I'll use terms like swing points, Gartley patterns, various candlestick signals that the bulls and the bears, the sign makers of the market, make for you and I each and every day. In fact, they do it on each and every time frame that we trade. And each of these signals or patterns are what I call tactical tools. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy, what I call mastering probability. And that's where I come in, because strategists, they slay the tactician all day long. Now, the foundation of any strategy is a strong mind. So let's look at one of our tools to help us think like a strategist. The tool taught to us by none other than Tom O'Brien, what he calls what you think about, you bring about, and what you focus on grows. You see, folks, that's his phrase or phraseology, but there's really a 6-step process to become what you think about. I want you to try this for 30 days because it will change your life. Number one, I want you to write down on a card or that memo pad on your phone what you want more than anything in the entire world. Make sure it is one single outcome that is clearly defined. Number two, don't show it to anybody. Carry it with you. Carry it with you at all times. In fact, I want you to look at it many times a day. That's why that memo pad is so good. How often do you look at your cell phone out there? I want you to look at this one thing, like Curly said in City Slickers, I think it was. That's a movie out there. Number three, think about it in a cheerful, in a relaxed, and in a positive way each morning when you wake. Very first thing you do. Number four, look at it before you go to bed at night. Look at it as if, and remember what it is that you've got to become in order to attain that. Whatever it is you're after, use your imagination. After all, that is the strongest nation on earth. Number five, here comes the difficult part. Stop thinking about what you fear, what's going to stop you from being able to attain that outcome. Each time a fearful or a negative thought comes into your mind, your consciousness, replace it with the mental picture of that positive image of you being able to attain that worthwhile outcome that you're after. And number six, each day of this 30-day test, do more than you have to do. That's right, do more than you have to do. Take control of your mind, knowing that your returns will be in direct proportion to what you give. Yes, folks, what you think about, you bring about, and what you focus on grows. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. We had the Dow close at new all-time highs again today, closing out at 16,943, up about 19 points. S&P up about 2 points, $1.83, closing out at 1951.27. NASDAQ Composite up almost 15 points, closing out at 43.36 and change. Russell 2000 leading the charge on the way up. Last three sessions up almost 1 full percentage point, 9/10 to be exact, up $10.67. NDX 100 up 1 point, not percentage point, so really a flat day out there. New York Stock Exchange up 14 points. Had a decent market breadth out here. We saw net advancing issues of about 1864, declining issues 1165, so 699, 700 in essence net advancing issues. That is bullish out here. Goldilocks. We had gold finish out the day, or trading right now at 1253.20. silver right now is trading out at 19.06. Light sweet crude was making a move today, up 1 7/10%. It closed out at it's trading out at 104.39. Our call-in number is 877-927-6648. Happy to field your call, answer whatever question I humanly possibly can. So now what you want to know is, okay, what's going on with the markets? Where are they headed to? And for that, we're going to take a look at a couple of different things out here. Let's first take a look at the ETF structure for the Qs. Let me put a chart on my screen. If you're just listening to us on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Of course, you may want to go catch the archive of this show. My shows in the morning are on Channel 9 and Channel 10. You may want to catch the archive of this show just to at least see the chart that we're looking at. We're going to focus in on the Qs to begin our session. Why are we going to be focused in on the Qs? Number one, if you're watching us on Tiger TV, you're going to see there's a nice 1.272 butterfly pattern. That'll complete at about 93.50. The actual intra-session high today was 92.98. Do you want to ask what kind of candle was it that was formed today? Nothing more than a spinning top. No reversal signal close to a reversal candle. All that we needed to see today was some kind of spike below 92.45. It did not get there. It got down to 92.50. Is that 5 cents important? Yeah, that 5 cents is important. Now, chances are we see a spike up to 93.50. However, I'm going to show you what may get in the way. A little bit of an indication that a retracement is underway, is trying to be formed out here in the marketplace. We'll be able to give you those parameters to take a look at. But what I want you to focus in on the Qs. This is really one of the more characteristic patterns with inside, and it only works on this ETF. And what I mean by that, it only works on this index ETF. And that's this. And I've pointed this out before. This is a different way to use volume than really anybody else that I know of that uses volume. And it's specific for the Qs. What the Qs do, if you go back and you take a look at the charts over the past several years, what you're going to find is that when the Qs are making a bottom, they're making it with volume. Big volume spikes at the bottom. Exhaustion moves to the bottom. Ordinarily, we would tell you that price needs to go down and test those lows out there. In the Qs, if Lee Corso were here, he'd say, hey, not so fast. And not so fast because if you go back and you take a look at your charts, you'll see those big volume days on the bottom, or big volume days have formed lows. No different than really what's taken place here this go-round. But here's the thing. Just as they have that characteristic for making bottoms, short-term bottoms, significant bottoms out here, so do low-volume highs. In this case here, what we have seen take place in 4 of the last 5 trading sessions. Look, folks, it's summer-ish type trading. But to my knowledge, other than it being the Queen's birthday out here, and I don't think too many of us here in the U.S. stock market were celebrating the Queen's birthday. Could be wrong about that. There's basically been no holiday in the last 5 trading sessions. Yet what we have seen is nothing but a series of low volume highs out there. That is an indication of a short-term top. Not necessarily a short-term top that I'm suggesting that you would play to the short side, but if you are long, wouldn't it be good to have an expectation as to what's going on inside the market out here? So I say there's one of 2 possibilities. Perhaps tomorrow could be Wednesday. We see a spike up to that 93.50 before the market then decides to retrace. You say, hey, where could it retrace to? You know, the first move of any retracement is the 0.382 retracement level. If it in fact made the 93.50 area, you could look at a move down to 89.61. Heck, at that stage, people might think the sky's falling. Folks, that's only the dead cat bounce, 0.382. Easily, this could pull back to 87.19. I don't know where it will pull back. I don't even know if it will. What I do know is for the last 5 days have given us a characteristic inside of the Qs that the market is trying to form some type of short-term top. How about on the intraday sessions? How about on a 120-minute time frame out here? Well, the 120-minute time frame, I'm going to switch over. I'm going to take a look at the S&P futures contract. As the S&P was making a nice high, this is a 2-hour chart we're looking at. So coming into the time frame of noon today, we saw the ES mini on the 120-minute chart. Well, really, the ES mini on any chart. It got up to a high of 1954.75. What took place over the next 2 hours was what's referred to as a bearish engulfing candle. And that's where the body of the previous candle is completely engulfed by the current session. That is a reversal signal. Now, ordinarily, maybe that wouldn't mean a whole lot, but that's a different story when you have price making a higher high, doing it on less relative strength, what Stevie's son here likes to call price relative strength divergence. And those patterns, when you learn how to play them, they give you fairly significant signals. Now, here's the thing that's interesting about it. It wasn't a confirming signal between 2 o'clock and 4 o'clock this afternoon. What I mean by that is even though the market had pushed lower, coming into the end of the trading session, we saw price kind of move a little bit higher. We did not get a second opinion. And folks, I don't know about you, when your money's at risk, or when you're taking a look at your health and the health of a market, you like to get a second opinion. We didn't get a second opinion, but we have signs here of a market that wants to top. And you want to be all over that next retracement because we're into a nice summertime rally. We'll be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for this afternoon. I am the morning lead anchor here at TFNN. My shows can be caught each morning at 9 a.m. So if you are wanting to understand what took place overnight, where the market's going, tune into that show. Of course, we're not on the radio in your area. You can always catch that show by going to the homepage of TFNN.com, and you can watch the show live. The upper right-hand corner, you'll see a little button, 3 little smartphone devices on it. If you click on that, the show will stream live. Of course, you've put in TFNN.mobi into your browser. You can pick up the audio version of that as well. We'll take a look at the New York Stock Exchange. One of our guys in the Tiger's Den was pointing out that the New York Stock Exchange had completed an A to B equals CD to the upside. This is a monthly chart, so this is coming off of the 2009 low. So let's go take a look at that A to B equals CD pattern. The 8-point down, this is the old lightning bolt pattern. It's incredible how these stocks will move in this pattern out here. And what you want to really do, what the coolest thing about the pattern is that the market does 75% of the work for you. So you can just simply be a master of buying and selling the D point out there, and you can make a small fortune. And the cool thing is it works on all time frames, all markets, doesn't matter what it is. You see, when I take a look at a stock chart like this, I actually am not really paying attention to the symbol. And that's pretty cool when you think about technical analysis, when you go ahead and you get rid of what it is, because when you realize it's just a chart that you're looking at and you're trying to do the analysis of it, then all of a sudden you're not married to what it is you're looking at. In this case here, it doesn't really matter to me. What I do know is we are looking at the New York Stock Exchange, and the B point happens to be the high that was formed on May 1st, 2011. The C point, this took place here during the month of October 2011. So your A is the March lows. Your B point happens to be here at May 1st, 2011. Your C point down here at October the 1st, 2011. That price, that low was 64.14.89. Now the 1-to-1, 100%, 1-to-1, A to B equals CD. The price projection on that is 10,951.39. So far, the inter-session high that we've seen is 10,941.86. Hey, I'm with Danny. That is close enough for me in our work out here, especially something that's priced out at 10,900 to maybe miss it by $10. But just because it completed a 1-to-1 A to B equals CD, does that mean that that it's over with? And the answer is absolutely not. That's why what I want you to do is I want you to become a master at mastering the C to D leg out here. Now, one of the clues that the move is not over, in this case here, if you take a look at the retracement, that B to C retracement, only a 50% retracement. I want you to picture, maybe Fibonacci retracements or expansions are new to you. But what you can do, like the easiest way to learn something is to link the known to the unknown. So each of us can do this. Each of us have done this before. We've probably been sitting in a meeting. There was a rubber band handy. We probably took that rubber band. Most of us usually use our index finger, and you wrap it around your index finger, and then you just start circling it or what have you, almost till like you circle it so tight that it cuts off the blood and circulation. Now, maybe many of you don't do that. I know that I can say that I've done that from time to time. Maybe just trying to bide my time inside that meeting, wondering what the heck we were doing in that meeting. But let me get back to the point here. I want you to take a rubber band, and I want you to wrap it around that index finger as hard as you possibly can. And now what I want you to do is I want you to back that off 38%, only approximately 38%. And if you back it off 38% and you let it go, what kind of energy comes off of that? Explosive energy, right? So when a market only makes a 0.382 retracement out there, that's telling us that C to D leg is going to be more than a 1-to-1. Now, the normal retracement is 0.618. When I took a look at the, I think the ES Mini, or maybe it was the NASDAQ, in that first segment, we took a look at the potential for retracement that would take place out here. And because the move has been so large off of the bottom there, a 0.382 retracement would feel like there's a pretty significant turn in the market. But that's normal. Heck, what's really normal is a 0.618 retracement out here. Well, if you took that same rubber band and you wrapped it around your finger and you backed it off 61% and you let it go, what kind of energy is there? Nowhere near as much as that 0.382 retracement. Well, in this case right here, what the New York Stock Exchange has done is a 50% retracement. That means it's got less energy than that 0.382 and more energy than the 0.618. And it says at this stage, until we see any significant signs of a reversal, this could be one of those A to B equals CD that's going to be more than a 1-to-1. That's the first clue that's out there. Well, we also know that we have out here inside of the New York Stock Exchange, and I'll go ahead and I'll delete the A to B equals CD. If you're watching this on Tiger TV, in fact, let me just do it on this chart here. I'll just pull over another. I use 3 charting tools out here. I use eSignal, I use Ensign Windows, and I use Ninja Trader. All are great platforms, all that provide a couple of different tools that I use that help me to master the markets out here. In the case of the New York Stock Exchange, what it did here with conviction, really the conviction I'd have to say came back in April 2014, a couple of months ago, is it broke a 6,000-point consolidation. And what consolidation patterns do, if you go back and you are a study of consolidation patterns, when markets break a consolidation, their measured move, it's called a measured move, the measured move is equal to the consolidation level. But really the message over the long term out here inside of the New York Stock Exchange is that it's going to change. It's going to trade up to the $16,000 mark. It's going to trade up there unless it somehow gets back into the consolidation zone. And until that time, that's the message of what's taken place inside the NYSE, the wider swath of the market. In order for that to fail, we would need to see the NYSE close below the October 2007 highs. Now, the New York Stock Exchange was the last one up and over. Well, I'd have to say with the exception of the financials, right? The XLF would be one that's certainly not over its highs from 2007. So, but we're not talking about the financials. We're talking about the wider swath of the market. We're talking about the New York Stock Exchange. And unless price ever gets back underneath 10,387, its message is that over time it wants to make a move up into the 16,000 mark. Now, the 1 to 1.272 A to B equals CD, I'm sure that somebody out there was saying, well, where's the next move if it's not going to do a 1-to-1? Well, the next move is actually 12,185 out there. That doesn't mean that it's going to do it overnight. It's certainly not going to do it overnight. And until we see some kind of reversal signal out here, that is its message. Now, it is making higher highs with less relative strength. And that's always something, just like we took a look at that 120-minute chart of the NQ, and you need to learn how to trade that pattern. You need to learn how to at least interpret that pattern out here. It's made higher highs, but there's so far, other than inside the ES Mini, which had that bearish engulfing candle, inside the New York Stock Exchange, no such reversal signal here yet. In fact, inside the NYSE, for this month, in order for there to be a reversal signal, we would actually need to see a close below last month's open. May's open, by the way, 10,626.51. So that is the message out here, is that the NYSE, yes, it has or is about to complete a 1-to-1 A to B equals CD to the upside. But folks, those patterns only make a 1-to-1 60% of the time. And right now, the message is that the NYSE wants to do one of those other 40% patterns that are out there inside of the market. Moving today, we had to the upside, Intercept Pharmaceuticals. It was up 18 points. Hittite, H-I-T-T. It had a big hit today. It was up $17, up 28%. Idenix Pharmaceuticals, a little buy out there, a nice 229% profit. XBI, the Spider S&P Biotech, took off to the moon today. That was up 6%. Family Dollar Store is up 13%. To the downside, getting roasted was Green Mountain Coffee Roasters, off $8, down almost 6.5%. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. And, we were talking about, or I was speaking about the NYSE, the consolidation patterns that are out there. If we just simply take a look at the longer-term charts, that was a monthly chart, by the way, that we were looking at for the NYSE. If we take a look at the same monthly chart, but this time for the S&P 500, if you're watching this on Tiger TV, it so clearly lays out consolidations And consolidations operate between, highs and lows on a consistent basis. In the case of the S&P 500, its consolidation pattern actually began back in 1997. So it went from the areas of about 793 or so back in 1997, made a high in 2000, in March of 2000, up at the 1552 level, then goes ahead and retraces. In fact, up there made a nice little price relative strength divergent pattern. We actually got the actual bearish signal. That took place right here in September of 2000. You did get some follow-through 2 candles later. Its second opinion was kind of a flip of the coin. It was a little doji candle. Next candle, though, had moved lower. That went ahead and sent prices all the way back down to the bottom of the consolidation when the lows were formed back in October of 2002. Couldn't bust them down. You can't bust them down. What's it try to do? It tries to bust them out, tries to bust out of the consolidation. But could it do that? No. Back in 2007, as it was making its highs back in October of 2007, monthly chart we're looking at, it was making what? It was making the most consistent topping and bottoming pattern that is available in the marketplace. When it goes and it makes a higher high and it does it on less relative strength, followed up by none other than some type of reversal signal out there. It's really not complicated. What's complicated is maybe learning the strategy, being able to differentiate between which candle signals are reversals and which ones aren't reversals, how to use them, the strategy of money management. Well, in this case here, those highs were set in. That really set the consolidation, because what did price do? Couldn't bust it up. Goes ahead and tries to bust it down again into the lows back in 2009, where it, of course, went to the extreme oversold condition using a 14-period relative strength indicator out there. Couldn't bust them down. Goes ahead and busts them to the upside. Now, this time here, in March, so 16 months ago, so 15 months ago, in March of 2013, price went ahead and closed above the consolidation level. And when price breaks above or below a consolidation, what you ultimately like to see is you like to see price come back and test it. Remember, inside the New York Stock Exchange, I said, look, the message of the market is it wants to move another 6,000 points over time. And the only thing that will change that is if it comes back into its consolidation zone. Well, inside the NYSE, it broke through that consolidation in March. It came back and it tested it the following month. It actually came back and tested it back in June of 2013. So a year ago. And remember, this is also during the unfavorable seasonal cycle of sell in May. Sell in May doesn't mean sell on May 1st or anything. It has in the past, periodically. But if you go take a look at what that meant in 2013, somewhat irrelevant. Are we in a similar type of a time frame out there? Let's not get too caught up into things that rhyme nicely. I can give you some rhymes, but they don't mean a hill of beans out there. What means a hill of beans is what are the markets doing? And at this stage here, you could say, hey, look at that rising price channel that you have on your screen, Steve. Isn't that enough of a ceiling to go ahead and stop price? No, it's a glass ceiling. And ceilings are meant to be busted. Lines were meant to be redrawn out here, and maybe that's all that the message of the S&P rising price channel lines are at this stage. What we know and what's interesting here is back in 2007, back in 2000, we had those price relative strength divergent patterns. And as we speak right now, there's potential divergence. What do I mean by that? It means if you take a look at the candle session on the monthly chart in December 2013, as market was making its highs, the relative strength indicator reading was 77.63. Right now, today, as we closed out the day for the month of June, you're at 77.03. This is getting ready to resolve itself, so this becomes an irrelevant pattern. And if, in fact, in the month of June, the relative strength reading is above 77.53, what I have listed here as potential goes away. There will be no potential divergence, and in fact, it says you got another 5 months before that pattern can even evolve out there. Now, that's not the case just yet. A lot of time left in June, but what we're doing is we're looking at the current message of the markets. That's in the S&P 500. Guess what? The Dow itself has a similar pattern. Here's the consolidation of the Dow. Now, this one is a little bit iffy. What do I mean by that? Well, its real 15-year consolidation pattern was a 4,550-point move. See, in this case here, the Dow actually broke out of the consolidation back in October of 2006. It broke out and it formed what? It formed a price relative strength divergent pattern back in October 2007. Price got back into the consolidation, went all the way back down to the bottom. The Dow's actually completed its measured move, in my opinion, of its real consolidation out here. But remember, a measured move, a consolidation break. The move is equal to or greater than the consolidation. That's what we have going on right now. If we take a look at the A to B equals CD pattern on the monthly chart, off of the March lows to the highs that were put in out here during May of 2011, and a retracement, which looks like what? It looks like a 0.382 retracement. Let's go measure that retracement. Remember, in the NYSE, it was about a 50% retracement. Now take a look at this one. This one's a beauty. If you go from the lows in March of 2009 to the highs that were put in here in May of 2011, and you go ahead and you put a retracement ruler out there, your dead cat bounce, your 0.382 retracement takes you to what? 10,428 and change. What the actual retracement was in the month of October 2011, you got to love it, 10,404 versus 10,429, the mathematical calculation. And that was all it did. Remember that rubber band that I asked you to wind up on your finger out there and then let it go? And what kind of energy does it have when it only does a 0.382 retracement? That, my friends, is the kind of energy that's inside the Dow out here. Now, the Dow, the 1-to-1 A to B equals CD, is 16,805. You're trading right now at 16,943. The 1-to-1.272 takes it up to 18,553 out there. So on the longer term, unless we see some kind of reversal, that is its message out there. You say, Steve, how can that happen out there? Let's just read the stock chart patterns. The how, the how, I can't tell you how. Price just simply goes up. There's enough liquidity in the market. Price just keeps rising. I can tell you that the patterns that are here, that's the signals that are being provided to us as we speak. If we go and take a look at the Dow Futures, what the Dow Futures signal provides to us, let's go take a look at it. The Dow Futures have been traveling in a 600-point consolidation, a shorter-term consolidation. This is a consolidating pattern that began back in February 2014. So from February 14th, Valentine's Day 2014, it's a daily chart. We're looking at my screen here. You saw that little sine wave going from high, or going from low to high, back down to low, back up to the high, back down to the low, finally breaking out of it, and breaking out of it back here on May 23rd. A 600-point move that says that right now its consolidation projection takes you up into about the 17,000 area. If you take a look at A to B equals CD patterns out here, your A point's going to be down at the low on February 5th. Your B point out here is going to be the trading session from April the 4th, and your C point's going to be a low down here at April the 14th. 1-to-1 A to B equals CD really matches up. It really lines up with that consolidation break, says 17,178. Now, this is a monthly chart we're looking at. So a number of things can happen along the way. But as I said, as we took a look at the ES Mini on a shorter-term chart out there, and this time here, let's go ahead and put up the NQ 120-minute time frame. I love the 120-minute time frames out here. If we go take a look at, now here's the ES Mini, for those of you just joining in late here. If we take a look at the ES Mini, one of the topping patterns, much like we looked at in the S&P, like we looked at in the New York Stock Exchange out here, what the S&P 500 futures contract did on a 120-minute, 2-hour time frame was it's made one of my price relative strength, or yours. It's not really mine. Of course, it's mine because of the way that I've created the strategy behind the pattern out here. That certainly is Stevie's out here. And that is giving us a signal that it wants to see a retracement. Well, inside the NASDAQ out here, let me put up the NQ. Let me put up the June contract. It, too, is making slightly higher highs, doing it with less relative strength. Now, it gave us a pattern referred to as a tweezer top. Is that a reversal signal? No. Is it a bearish pattern? It's referred to as a bearish pattern, railroad tracks, a tweezer top, a reversal signal. You like to see something a little bit more. There's some other elements that I'm looking at right now that'll give us an indication whether it's overnight or it's early morning during the 8:30 to 9:30 type open that'll let us know, that'll give us a signal that the market is ready to pull back. Now, what do you do about that? Do you go ahead and short it? Hey, look, if you're an intraday trader and you get enough signals, you can. What I say is that as we take a look at the trends, and the trends are your friends out here, and you take a look at the longer-term charts, I would say what you want to do is you want to be looking for positions to buy. I think you want to take a look at this summertime rally and all the other signals that are present in the market that say that they want higher price out there. And, of course, one of those patterns is certainly my friend and yours, and that is the Euro-Japanese yen, the single currency pair that tracks the market better than any other currency pair, and that is actually attempting to form an A to B equals CD to the upside. It backed off a little bit today, but it's still not bearish. and it wants to move up to maybe 140.68, 141.23, 141.92. All of that says he's just putting some good fuel in its tanks for the markets to move higher. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, morning anchor here at TFNN.com, filling in for Tom, and I am author of Mastering Probabilities, a daily investment and a newsletter service. Has a performance records all tracked, positive expectancy. I make money for my clients. It's like operating a business out there. If you're looking to get more out of your trading and investing, if you're looking to be able to obtain some education, have, in essence, almost instantaneous access to myself to help you take a look at a specific chart that you're looking at or a pattern or something, then go over to the homepage of TFNN.com. Go down towards the middle section there where it talks about each of the contributors. If you click on my name, Steve Rhodes, that'll take you to the to my page, and there you'll see Mastering Probability. You'll also see a couple of other workshops, 60-minute workshops that I believe that I've done that you can get access to, and go check it out. 30-day unconditional money-back guarantee out there. Now, so what is it that we are taking? Like, we're looking at markets here that have given us nice long-term bullish signals, nice intermediate long-term, intermediate long-term. How's that for stepping all over myself? Intermediate-term signals out there that the market wants to move higher on an intraday basis, 120-minute time frame. It's giving us an indication that, you know what, it doesn't have the legs, much like California Chrome, to take on some of its young blood out there. You know, and in the market, instead of being a poor sport, what the market will do, it'll signal to us that, you know what, I don't have the energy to make the move higher. So then it does a retracement. It starts to pull back. And if it can pull back with light volume, it's really kind of resting out there. Because if it has to really work really hard and it's got to pull back and it starts pulling back with big volume, then the bulls really have to go to work out there to try to stop that descent. So we've seen some signals, and so if we come in tomorrow and futures are lower, we'll already know ahead of time that the signals that were being given to us at 2 o'clock in the afternoon suggest a market that wants to retrace a bit. It wants to cool off. It wants to gather up some energy to go back and take out those most recent highs out here. And that's what I believe that the market wants to do. And that's the message from the QQQ ETF, because 4 of the last 5 trading sessions have been on light volume. That is a characteristic of a ETF indice that puts in short-term tops. If we saw some other signals out there, I would say the top could be something more significant. But that is not the signals of the markets as we speak right now. So that is really what our expectation ought to be tomorrow. If, in fact, the markets just move higher, there is no retracement. There are some levels up higher, a little bit up higher inside the Qs that we took a look at that complete a 1.272 butterfly pattern that we have to be aware of. So overhead, if I were the pilot that was flying your plane, and I am, I would tell you if we wanted to go up a bit higher, we're also going to run into turbulence up there. Now, let's take a look at a couple of stocks here that were moving in the markets today. To the downside, you had AutoZone. AZO is the ticker symbol. That was the leader on the way down, $8.21. Closed down 1.5% out here. If we take a look at AutoZone, it closed at $532.57. Now, it should have some support out here, even though it was the leader on the way down. Volume today off of the highs, nothing too substantial. 233,000 shares out there. Nothing too shed, nothing too big. It's got a level called the market profile. This is the TAS market profile system that we're looking at. It's included inside my e-signal package out here. That's the charting system that you're looking at right now with the black background. This says that support. This says that AutoZone on a daily basis should find support at about the 524.45 level. Let's switch over and take a look at the weekly chart. So remember, 524 is the daily support. On the weekly time frame, support comes in at a price level of, the unfair high. That really becomes its support level. That's about 513. So 513 to 524 should be support for AutoZone. If it can pull back there on light volume, maybe there's a trade that is set up if you were looking to get into AutoZone. If it can't hold 513, then this says 497, 489 is likely the area where price would pull back to, and that was on AutoZone. If we go take a look at the price line was down $8. Not a big deal out there today. Let's look at Wynn Resorts. That was down $6. As I recall, that was testing a level of support earlier in the trading session. Let's take a look at the weekly support using the market profile. It's traded down very close to it. 194.27 is the number. Today we saw a low of 195.80. Pretty close. So if it can hold 194.27, and it should be able to. In fact, it was. Well, let me put the daily chart out here, because if you take a look at a weekly, there's a volume bar the week of April 28th, and that low out there is 188.43. And with today's gapping down, I would suspect that that's what it wants to do, is test that low. But if it can test that low, get back above 194.27, nothing but a little bit of a trading range inside of Wynn Resorts out here. Today, it did break through its daily unfair low, its daily support level. And that's never a good scene, except that we know that on the weekly chart, it's just not that much further down. And unless it breaks the swing point from April 28th, volume on that trading session on the way down was 3.7 million shares. You're trading inside it today, you gapped down, and you did only 2.5 million shares. I would have to say inside Wynn Resorts, that is not enough to bust them down out there. It does say that it would go ahead and test the low. That low again being 188.43 out there. If it can test that and hold it, just setting up a bit of a trading range. Again, Wynn Resorts, WYNN. Let's take a look at something here. Moving to the upside. Let's go take a look at that S&P 500 biotech, the XBI. So many folks trade the IBB. That's the NASDAQ biotech ETF out here. Let's go take a look at the S&P version. Now, the S&P version up above resistance out here on the daily chart. Its resistance level is 134.74. It took out that level with volume today. It actually passed a B point with volume. The let's see here. The A to B equals CD looks like this here. The A point on this, we're going to come all the way back to the April 15th low. We're going to use as a B point. We're going to use the high from, guess we have to use April 22nd. Yeah, that's probably the best one. And the C point is April 28th. 1-to-1 is what it more than gapped up through today. It also gapped up in the 1.272. I would have to say this is headed to the 151.29 level. Let me take a look at the weekly chart out here. Let's see if this is also up above resistance. And the resistance on the weekly chart, most certainly is. So resistance, of course, we're only one day into the week. But if by Friday this is closing above 144.74, this suggests, let's take a look at retracements here. Let's take a look from the retracement high. Well, I kind of missed it just by a tad out there. But, come on, Steve, do this. Click it, and forget it. So right now it's made the 0.618 retracement, or close to it, right around the 150 level. Well, folks, that's the end of our show. Thanks so much for joining me. Remember, go over to the homepage at TFNN.com, click on my name, Steve Rhodes, see all the details about mastering probability, and tune in tomorrow, 9 a.m., 9 to 11. Thanks so much for joining us. Have a great day. Look forward to seeing you soon.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Good day, Money Masters and Treasure Hunters. Welcome to the June 9th magnificent Monday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, morning anchor here at TFNN.com and author of Mastering Probability, the daily newsletter service that is the intelligence for creating your financial freedom. I'll be filling in for Tom during this last hour here, and I am grateful for your presence here today. Now, my outcome this evening, well, it's to teach you how to master the tools for trading. And that includes the tools of the mind, because when we can master the tools of the mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD, swing points, Gartley patterns, various candlesticks, the signals that the bulls and the bears, the sign makers of the markets make for us each and every day, and time frame that we trade out there. And each of these signals, each of these patterns are what I call tactical tools. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it is to have a strategy. That's what I call mastering probability, and that's where I come in, because strategists, they will slay the tactician all day long. And, of course, the foundation of any strategy, well, it's to have a strong mind. So let's go look at one of our tools to help us think like a strategist, one of my favorites to share with you on the Tom O'Brien Show. And, of course, it's called Become an Ant. You see, ants live by a four-part belief system, a success philosophy that each of us need to live by as well. Belief number one, ants never quit. If an ant is headed somewhere and you try to stop it, it'll find another way. You know this to be true. You've tried to stop an ant. They'll climb over, they'll climb under, they'll climb around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you're supposed to go. Belief number two, ants think winter all summer long, and that's really important because summer doesn't last forever, and therefore ants gather their winter food in the middle of summer. Belief number three, ants think summer all winter long. Even more important, because during the winter, the ants remind themselves, hey, this won't last forever. The first warm day, the ants are out. And, of course, if it turns cold again, they dive back down to the earth and they ready themselves for the next warm day. Yes, folks, they, too, cannot wait to get out and enjoy summer. And belief number four, the question is, how much will an ant gather during the summer to prepare for winter? And the answer is all they possibly can. Yes, this is the way to live. Never give up. Always look ahead. Focus on what you want. Stay positive. And most importantly, do all you can do. And you've got my commitment here during the next 60 minutes to do all that I can do for you. It is Magnificent Monday. This is TFNN.com. I'm Steve Rhodes, and welcome to the show. We had the Dow finish up a total of $18.88. We'll call it 19 points, closing out at 16,943. S&P up about 2, closing at 1951 and change. NASDAQ Composite up 14 and change, closing at 43.36. A Russell 2000, a strong index in the market today, up over 10 points, nearly 1 full percentage point, closing out at 11.75. NDX 100, a little doji candle today, I'm sure, because it closed up 1 point out there, closing out at 37.95. New York Stock Exchange up 14. Gold right now trading back 60 cents. She's trading out at 12.51. Silver up a nickel as we speak, trading out at 19.04. Light sweet crude up $1.85, trading out at 104.51. Our call number is 877-927-6648. Feel free to give me a call. We can take a look at your stock chart for sure. Let's go take a look at the Dow. Let's go take a look at the Dow, see what it did today. If we're looking for candles, reversal signals, anything along those lines, let me put the daily chart. That'll help us if we look at the daily chart on our screen out here. We're going to see a candle. It's kind of referred to as a spinning top. It's not a reversal candle. If we take a look at the small A to B equals CD pattern inside of the Dow, we really got two of them. The small one is the one that formed here. April 11th was the A point out there. May 13th was your B point. And I just did the wrong thing out there. How about that? Let me try doing that again. That was called Fat Fingers out there. The A point, we'll go ahead and put that back in here. Sorry about that. Usually don't do that. The A point, again, being the low of April 11th. The B point being the high of May 13th. And the C point being the low of May 20th. 1-to-1. A to B equals CD. This is the smaller one. Says the Dow ought to get up to 17,061. That's your 1-to-1 A to B equals CD. 1-to-1.272 would take it to the 17,257 range. That is your target area. That is your longer-term target area, because there may be a little bit of a rest that that begins to take place today. That is what's going on inside the Dow. If we go take a look at the S&P 500, the S&P 500 closing up $1.83 today, closing out at 1951. From a candlestick standpoint, let's take a look at its small A to B equals CD. Today's candlestick, a little bit of a spinning top as well. The low of April 11th becomes our A point. The B out here coming in on May the 13th. The C point, a two-day retracement down at the lows on May 15th. 1-to-1 A to B equals CD. That's at 1950.17. You close at 1951. That pattern is complete, but there's indications that what the S&P wants to do is trade up to the 1974 level, the 1-to-1.272 area. Let's go take a look at the NDX 100. The NDX 100, let's go take a look at its A to B equals CD patterns on the daily chart. Now, today's candle potentially important. That is a doji. Why is that important? Well, dojis at resistance have a bunch of meaning. Dojis in the middle of a move, beginning of a move, they basically have, from my standpoint, they're somewhat irrelevant. If we take a look at the A to B pattern, A to B equals CD, the low from April 15th is going to be our A point. The B point is going to be the high that took place April 24th, the retracement down into April 28th. And you're going to see that what is taking place here right now as we speak is a move to the 38.11-ish area. Didn't get all the way up there. It got up to a price point today of 38.04. In my book, that's close enough. That's your 1 to 1.618 A to B equals CD. What we have to recognize is it's the NASDAQ that led us down, the NDX 100. It's the NASDAQ that has led the market's top side. That's why we want to pay attention to the patterns that are out here. The doji candle coming at the completion or very near the completion of a 1 to 1.618 is suggestive of a market that is a bit tired and wants to rest. Where could it rest at? Well, as far as retracements are concerned, if we go take a look at retracements, if I go from my A point all the way up to the high today out here, that says that you're looking at a dead cat bounce. About 36.55 would be the first area that I would look at. A 0.618 retracement, which will take a lot of energy to get down there, would be 35.63. But 36.55, that is most certainly a doable pattern out there. And that was on the NDX 100. Let's go take a look at the Russell 2000 because that was the big mover of the day out here. Let's take a look at the Russell. Where is it? That was up 0.9% out here. Let's take a look at its patterns out here. Let's take a look at its A to B equals CD. Its A point is going to be the hammer candle. That's the hammer candle that took place out here on the trading session of May 15th. Boy, that was hammering out a bottom for sure. What a buying signal that gave to the markets. Oh, bullish engulfing candle the very next session. Nonetheless, your B point out here inside the Russell looks like that took place on May 27th. Retracement, a very shallow retracement on June 3rd, a 41% retracement, close enough to a 0.382 retracement. That says that it's a strong A to B equals CD that's underway. Well, the 1-to-1, that target level in essence was hit today, 1180. 23 is the exact number. We saw the Russell 2000 get up to 1179.40. But it does indicate to me that what the Russell wants to do, it wants to move beyond this. That move is not over, at least on the daily basis. Retracement, whole different setup. Why do I say retracement? I say retracement because that's what the chart patterns are beginning to indicate. We'll know more come 9 o'clock in the morning for sure. We'll know before then, I would say. But 9 o'clock in the morning, we should have a pretty good idea whether or not this pattern here, we're taking a look at the NQ, the real strength of the market. It's the same pattern inside the ES. Where it makes a higher high, does it on less relative strength, and then gives us a reversal signal. But the bigger reversal signal is really coming inside the ES. So it's going to be the S&P futures that we're going to keep an eye on. If tonight, and right now it's trading out at 1949.50. If it can close below 1948. So tomorrow, you wake up early. Maybe you're an early riser like I am, 4:30, 5 o'clock. That early bird catches the worm. Early bird also gets a lot of work done early in the morning. Well, whatever time it is you wake up, if in fact you see that the S&P is below 1948 out there, pretty good indication that we have a retracement that is underway. Now, it'll take a little bit more than that to really ensure some kind of nice damage or, when I say damage, nice enough to be able to look for a buy point in the market. No guarantee that that's what's going to happen because we have the potential reversal signal here. We don't even have the confirmation, what I like to call the second opinion, in place here as we speak right now. But getting below 1948, that would be one that we would take a look at. We had the Dow finish up 18, S&P up 2. This is TFNN. When we get back, we're going to go out to our gal out in California at IBD, Amy Smith, and we'll see what the IBD take on the markets is. This is Steve Rhodes. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the evening. And as we do each Monday at 20 past the hour, we've got our Investor Business Daily Update. That's presented to us by Amy Smith, one of the best tigresses out there. And for those of you not familiar with Amy, she is a market commentator, host of the IBD show Market Wrap. You can hear Amy every Saturday afternoon on AM 870. It's heard throughout all of Southern California. And the show is How to Make Money in Stocks with IBD. She's also got a fabulous book out there, How to Make Money in Stocks, Success Stories. And this book is a must-read. You want to make sure that you've got it in your library out there. Amy Smith, welcome to the Tom O'Brien Show. Great to speak to you. How you doing today?
Oh, thank you so much. Well, we're just doing great out here. We had a really gloomy morning, but fortunately the sun is out and all is well in Southern California.
Well, now, gloomy, I used to own retail stores at Disneyland for years, and gloomy mornings are part of the normal fog that's rolling in.
It is, especially this time of year. It just seems like, you go outside and it's pretty gloomy and pretty sort of moist, and then the afternoon comes, the sun comes out. It's supposed to be about 81 today, so we certainly can't complain.
No, and it works out great that the markets close at 4 o'clock in the afternoon. Right, you know, realistically, I guess your day, isn't it over at about 1 o'clock, except for Mondays when you spend time with us?
You know what? Would that just be so wonderful that each of my days would end at that time? But unfortunately, my days end much later than that. But yes, in theory, I could be done by 1:30. You're right.
Oh, now we're not gonna get into the joke about the difference between theory and reality, are we? No. Well, hey, how about in theory and maybe in reality? What's IBD's take on the market? Let's get into to that, because now in reality we did have a follow-through day, right, in the NASDAQ a week and a half ago or so?
We did, and it's kind of interesting. We weren't really sure what this market was going to do, but it's kind of hard to argue with the NASDAQ, the Dow, and the S&P hitting these all-time highs today. The NASDAQ for a while it was lagging, but now it's very comfortably way above the 50-day moving average.
Yes.
We were waiting for some stocks to make some moves. Everyone liked the European Central Bank cut their rates last week. The market really liked that. We continue to kind of move higher. Today was kind of a slower day in the market. But what's kind of interesting is we had this period of red-hot IPOs a while back, and now we're kind of seeing the more recent IPOs is really giving the market kind of a jolt.
Okay, well, that's good. And then, of course, you got the Uber news out there. They're raising all kinds of capital, so I guess there's plenty of money around. And what are you, speaking of the IPOs out there? What are some of the more interesting names that our listeners ought to consider? And what are some of those IPOs that are now in the leaders list out there?
That's right. Well, we have one called Rice Energy, and it's the ticker symbol's Rice, RICE. It pulled back a little bit today, but, one thing that Tom and I have been talking about for, it just seems like several weeks now, and I'm sure you've seen these on your list too. It's amazing. These oil and natural gas exploration companies are they're doing great bonanzas. And this is a newer IPO, came public in January of this year. They are located in the Appalachian Basin in Pennsylvania. What is striking about Rice Energy is that their sales jumped 584% in the most recent quarter. So that one's an interesting name. And another one in the energy name is Diamondback Energy. I think that the ticker symbol on this is pretty funny. It's called FANG, F-A-N-G.
Yeah. I think I saw that last week on Friday, or it was making a move Thursday or Friday out there. Yeah,
that's right.
And tell us about this one. Now, there's some good. In fact, this one here, I think, is I take a look at different chart patterns out there, and I think it's got a nice A to B equals CD, meaning that it should make a move up to about 84.03. It closed at $82 today. But you think from a longer term standpoint, this is also a nice looking IBD type chart?
With the FANG?
Yeah.
Yeah, the FANG is just, what I noticed today? Super tight trading. You just take a look at that chart. In the last several days, it's just had such nice trading out of kind of a flat-based breakout. But I agree with you. This one looks really solid to me. It's just been inching and inching higher. And another one, this one has a very funny name. I'll have to tell you, Steve. It's called Parsley Energy. Parsley, with all the health food stuff around, but this is an energy company. And this red-hot area that we're finding, the Permian Basin of West Texas, I just keep seeing name after name out of that area. Now, this company says that they focus on the deepest and thickest portions of the Midland Basin. They do something a little bit different than the other natural gas and oil explorers.
Okay.
They have 55 million barrels in oil reserves. This was as of December last year. They say that 54% of it's crude, 23% of it's natural gas, and the rest of it's in a dry form of natural gas. So it's very, very new. Came public in May of this year, so we just have to keep an eye on it. But one thing that I caught, it has 4 quarters in a row of triple-digit earnings, and of course that's always something we take a look at. Pulled back a little bit today, but I'll tell you, it rebounded, and that was nice to see.
And what would IBD? What would their take be? In an IPO, like you say, it just came out May the 23rd out here, so it hasn't traded for more than a dozen trading sessions or so. Would the message here to wait and watch it trade for a while, form a base before you would jump in? What would kind of be some of the parameters you might look at?
That would be exactly it. Technically, when we've studied all these IPO bases, just going back historically. Mm-hmm. They should be at least 2 weeks in some sort of a price consolidation, and this one has not done that yet. It's kind of gone straight up. But if we see 2 weeks and it forms something, either some sort of a flat-based consolidation, a little cup, anything that looks like a base structure. So we don't have that yet. Something else that's interesting about this that people should keep in mind that our research shows is that the more successful IPOs, and this is not anything guaranteed, but Credit Suisse and Goldman Sachs, if they're the lead IPO underwriters, we find that they have a very strong track record for bringing successful companies public.
Okay. Well, that's
another thing to know.
Yeah. So, what stocks are being profiled in the New America section? that are doing really well.
We have one called Activist. It's ACT. We're going to see these names over and over again, Steve. They develop generic and branded drugs for hypertension, sleep disorders, contraception, and pain. With the health is we have the baby boomers that are aging, and so all these health and drug companies we're seeing really.
Hey, you're poking the tender underbelly out there. Be careful.
Wait, I didn't say you were aging. I said there's many people out there that are aging.
No, I just have to look in the mirror and see that receding forehead out there. And when the person that's been cutting my hair for about 30 years, I mentioned that the other day, and she said, "Well, there's always Rogaine." I said, "Thanks.
No.
You just really did a whole lot for me. You didn't have to agree with me there."
Well, I'm sorry about that.
That's okay. It's the truth. It's the truth out there. So Activist, that's the one to be looking for. Now, over the weekend on your show, did you do an interview with Scott O'Neill?
We did, and I just think it's kind of interesting for people to hear. First of all, it's Bill O'Neill's the chairman and the founder of IBD.
Yes.
And so Scott is his son, and it's just interesting and fascinating to hear from a veteran portfolio manager. Has a lot of great stories about Bill, good advice about trading and investing, and anyone can listen to it on investors.com/radio show.
Well, Amy, always great to hear from you, and thanks so much for sharing everything with all listeners here at TFNN. Folks, do yourself a favor. Go out there, get on Amazon.com, buy Amy's book, and listen to her show every Saturday. Amy, have a great week, and I look forward to speaking to you again soon.
Oh, thank you. You too, Steve.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the evening. Dow finishing up 18 points, new closing high out at 16,943. S&P up 2 points, just shy of 2 points, closing out at 1951. NASDAQ up 15, closing at 43.36. We did have a little bit of movement in the volatility index. The VIX up 42 cents, up about 4%, closing out at 11.15. Of course, we can see that that did no damage to the markets, so to speak, out here. And so long as the VIX is, if you're watching us on Tiger TV, one of my favorite charts out here, and again, it's a different way of taking a tool and being able to apply it to the markets to give us some type of meaning, something that can help us from a trading standpoint, and that's this. If you're watching this on Tiger TV, the upper portion of my chart is the actual VIX index. I didn't mean to do that. I meant to just try to make the center line. How about that? Come on, baby, do that for me. I won't worry about it. There we go. So the top of the chart is the actual VIX index, and the red line that's running across it is the 50-day exponential moving average, which, as we speak right now, closed out the day. 1286 is the 50-day. The VIX closed at 1115. That means the VIX is below the 50-day. When the VIX is below the 50-day exponential moving average, that tells you, I like to use this as a liquidity gauge. People use it. They talk about fear and no fear. Folks, I don't know how to trade fear and no fear. It just doesn't have a whole lot of meaning to me. So why would you even waste a whole lot of energy if it doesn't have a lot of meaning? Instead, where's some meaning that has some application that helps us in our trading, investing, and navigating the markets? Well, take a look at the price pattern behavior. This is a perfect example of it. The VIX index closed below the 50-day exponential moving average on April 16th. Now, this is not necessarily a tool of being able to sell the top or buy the bottom. This is a tool used to get the big burger out there. You know, and I don't know about you, but when I'm eating burgers, which is really never, but if I were to eat a burger out there, I'd want a big, juicy burger. I don't want the bun. Well, so let me teach you about how to use the VIX so that you can get rid of the bun out there and you can just have the burger. And that's this trading session here on April 16th. April 16th closes back below the 50-day exponential moving average. Since that time, the VIX has been below the 50-day exponential moving average. One of two things happens when the VIX gets below the 50. Either the market moves sideways, that's neutral to bullish, or the market moves higher out there. And that's exactly the price pattern behavior that we have seen inside of the markets out there. If you come back here and you take a look at it during the time frame back in February 11, 2014, we saw the VIX move back below it. One day it was above here, but for the most part it ran below the 50-day exponential moving average until the trading session of March 13th, and it made a high a couple trading sessions before that. When the VIX is above the 50-day, just as it was on January 23rd, 2014. That's when we saw some price, because the bottom of the chart, by the way, that's the S&P 500. That's when you saw price erosion. So let's not worry so much about where the VIX is from a dollar standpoint and how low it is historically, and that there is the so-called complacency in the marketplace. If that's how you want to use it, then God bless you. Not because you sneezed, but how do you put that into an actual trading program out there? How do you use that to navigate the markets? I say just simply put a 50-day exponential moving average out there, accept the fact that this is not a tool to help you sell a top or buy a bottom, but it is a tool to have a nice, big, juicy burger. Now, maybe you're more like me and you'll eat some fish and you'll have a little tuna burger, and I'm not talking the kind of tuna you get out of the can, but something nice and fresh that you just took in from the ocean, and you make a nice little tuna steak or some tuna tartare. I think that's what I'll have for dinner tonight. So that's how you use the VIX. Then it's underneath the 50-day exponential moving average out there. Let's take a look at, let's go see what's going on inside maybe some of the sectors out here inside of the market and some of the sectors. Let's take a look at, what is arguably the weak sector out here is the financials. Now, what's interesting about the financials, I can say they're weak, but if we do take a look at them, they closed out the day, the XLF that is, at 22.90 out here. So not a bad move. It's up over its most recent highs, which was on the trading session of March 21st. Now that had 67 million shares. And as price got above that level, which is 22.65, it did that on Friday. It did it with 30 million shares. That was 30 million shares, taking out 67 million shares. Today, 32 million shares as well. A to B equals C to the upside, regardless of volume out here. If we take a look at that pattern, we'd use the low of April the 11th as the A point. The B point would be, I'd say we'd probably use the high out here of May 13th, a retracement over the next 2 days, takes you down to the May 15th low, 1-to-1. A to B equals CD. Well, that was 22.59. Moved past that last Thursday. Had some decent volume. but nothing substantial. Not enough to take out the highs per se with a being a real volume breakout. It is most certainly a price breakout today. Got it up to the 1.272. A to B equals CD. No reversal candle in its path right now. If we take a look at retracements, let's go figure out a butterfly pattern out here. We're going to do that by taking a look at really retracements. Now, we're going to look at expansions. We're going to use our swing point here. That same one with volume on March 21st. We're going to use that high. We're going to come all the way down to the low. That was our A point out there. And what that is going to show us is that the 1.272 expansion, which is also the 1 to 2, it's actually the 1 to, it's a little bit less than the 1 to 1.618, A to B equals CD. That's priced out at 2305. So it would look like to me the financials are targeted up for the 2305 to 2323 out there as their next move. They are in the extreme overbought condition. And when you get into an overbought condition, that's using the 14-period relative strength indicator out there. When you use that as a great tool, when price gets above the 70 level, it tells you, hey, you're really starting to extend yourself out there. Now, there's no reversal signal. Extending yourself, there's nothing wrong with extending yourself out there. In fact, that's what I always want each of us to do, right? Extend ourselves. If we don't try to lift more weights each and every day, how are we going to get that muscle any stronger? You got to expand. You got to extend yourself out there. What you're looking for is a reversal. You know, and lifting too much weight, the reversal or the signal is where your muscles all of a sudden get too sore, so sore that you can't even lift that weight, or whatever the signal might be out there. Inside the XLF, we don't have that signal as we speak just yet. So that is the levels to be watching inside the XLF. We'll see how this plays out. But let's go take a look at some stocks with inside the sector out here. Let's do that. Let's take a look at J.P. Morgan. Now, J.P. Morgan today finished up 0.8%, up 45 cents. Not too shabby. Closed out at 57.42. Let's go check out its patterns out here. Now, what it did, if we take a look at the TAS market profiles out here, those help to identify levels of support and resistance as well. Another tool out there, another mathematical tool. Well, the resistance level that it was able to take out was priced at about the 55, 58-ish type range. It broke through that on Thursday. No problem. Let me take a look at a weekly chart out here. Let's see if it's running into any kind of potential resistance on the weekly chart. It's what's called the unfair high, and guess what? Last week it broke above that. That was measured at 56.48. You closed out the day at 57.42. If we take a look at J.P. Morgan on a weekly chart, let's go take a look at its retracement level here. Let's use the high. The swing point is going to be up at the March 24th high. The swing point low looks like that's going to be down here on May the 12th. And if we look at it, its retracement level, it's 0.618, where it's trying to get up to, is priced out at 58.23. That is on the weekly chart. Now, what I would have to say here is that what the J.P. Morgan, it doesn't have the volume behind the move. But it is inside this big downdraft candle session out here from April 7th. And as long as it's in there, and interestingly enough, the 0.786 retracement of that move takes you up to 59.66, which is basically the high. It's the where the weekly candle session opened the week of April 7th out there. So on the weekly time frame, that is its message as we speak right now. That is on J.P. Morgan. Back to the daily chart, though. We go take a look at the daily chart. We know that it's in bullish mode out here. At least it's in the mode to certainly say, hey, you shouldn't be short. Whether you want to be long or not, that is up to you. It is passing swing points with light volume. It's coming into a downdraft as well. But if we take a look at just simply a shorter term A to B equals CD pattern here inside J.P. Morgan, the 1-to-1 says it wants to get up to 57.97. I'd have to say this pattern, to me, suggests, because you can see the gap out here, the gap that took place, here's the low of April the 10th. That's really your gap. That low out there is 57.38. You closed out today at 57.42. You closed the gap out there. If it can get a little bit further, it would say to me that price wants to run to 58.77, probably 59.79. More than a 1-to-1 A to B equals CD to the upside. And, of course, if we look at that retracement, only a 30% retracement. That's that rubber band that's being wrapped up real tight. Take that rubber band, if you want to understand retracement levels, wrap it around your finger as tight as you can, almost so much so that it cuts off the circulation, and then only back it off 38%, and then let it go. How much energy is there? That's what helps us to master and understand that C to D leg. 877-927-6648. We'll be right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, the morning bookend inside TFNN. I kick things off for TFNN each morning. If we are not on a radio network in your area, you can still catch that show live. A couple of ways to do it. Number one, on your mobile type device, your pad device, your internet device. If you go ahead and type in TFNN.mobi, you'll be able to get the audio version of that. And if you'd like to see my charts live, well, then what you can do is go to the homepage at TFNN.com. Upper right-hand side, you'll see a button. 3 smartphone type devices on that. Click on that. The show will stream live. Of course, you can always join the Tiger's Den, and you can see all of our charts in HD. And so if you are a person that is trying to learn technical analysis out there, and I really suggest that you do it, then go join the Tiger's Den. Number one, there's a great group of folks that are in there, always there to assist and provide some trading ideas. And you get to see all the charts in HD. Nothing like seeing them in HD out there. So let's prepare. Let's sort of kind of go through the markets. Well, you know what I want to do? I want to take a look at the gold, silver, light sweet crude for you. So let's do that. We haven't looked at that. And then we'll come back. We'll circle around. Take a look at what the potential is for patterns that are present in the market on the shorter term basis. With regard to Goldilocks, so today, gold, what it did was it found some resistance, and the resistance level that gold is trying to break above is 1256.60. If on a daily basis it can close above 1256.60, that's going to be short-term bullish out there. It has created a nice little bottoming pattern over the course of a 4 trading period session. June 2nd, June 3rd, which was a little doji, June 4th, another doji, and then June 5th, which was nice bullish engulfing, set up a nice morning star reversal pattern. Significant bottom. If it fails, what I mean by fails, if price closes below the June 3rd level at 1240.20, then what we're going to likely see Goldilocks do is we're going to go ahead and we're going to see gold go ahead and complete its A to B equals C to the downside, which will take it to the 1216 to 1185 area. But nonetheless, what we do know is that gold has been extremely oversold, and it's also running into resistance. It's been moving sideways to slightly higher to work off that oversold condition. The question is it really forming a bottom out here? If it can hold 1245.70, then the answer is yeah. It very well may be. But it's also got to close above 1256.60. So that's the number to be watching on the daily chart. On a 240-minute, on a 4-hour time frame chart, it's right now priced out at the point of control. Its point of control is where you have the largest amount of congestion. If you're driving home tonight, there's probably a point of control that you run into each and every day when you take the same route home. Well, in the case of Goldilocks, its point of control is right around the 1250-ish type level, 1252 or so. That's where it's priced at. If it can close above on the 240-minute chart, its number to get above is 1258. Its number to get below for the bearish side is 1249. Right now, it's just in a little bit of a trading range out there. That is what Goldilocks is doing. If we take a look at silver out here, take a look at silver's pattern, it also is trying to form a bottom. Silver has tested its December 31st lows out there, or the lows. I don't recall if it was December 31st inside of gold, or if it was a day or two earlier. I can tell you what day it is now that we're looking at it. That is December 31st. So it tested those lows. It's done it on lighter volume. It's held that area so far. But what it really needs to do, unlike gold, what silver actually needs to do is get above 1921. As long as it's below 1921 on the daily chart, it's bearish, not bullish out there, and that's with regard to silver. Let's take a look at light sweet crude. Light sweet crude had a big move today. Let's go see its levels of support and or resistance out here. And let's take a look at the daily chart. The daily chart says, look at this. Went ahead and it is closed just slightly above its unfair high, which is 103.58 out here. And if it can stay above 103.58, that actually turns out to be bullish inside light sweet crude, and would say we would see higher price. Now it's trying to take out a swing point. In essence, it has from May 27th. I don't have volume. Well, the volume here says 55,000 contracts, but I don't think that is right. And on this system here, I'm using the profiles. I'm using these profiles here. It's a symbol that I have to put together in order to be able to get the market profiles. I have to switch to the current contract to check out the volumes. Let's not worry about that as we speak right now. Very key that 103.58 from the bullish side, that the price stays above it. Likewise, it's bopping its head up against the resistance on the daily time frame. Let me see on the weekly time frame out here where its resistance level may be, and weekly basis it's up above that. But of course, we're only one day into the week. 102.32, by the way, is the weekly resistance area, and that it was for light sweet crude. But right now, things are looking bullish with regard to black oil Texas tea out there. Okay, now what do we know? I think I covered this during the first show, not this show, so let me cover it now. Let's go take a look at the ETF structures. Let's go see what we've got going on here. Number one, we're going to take a look at the Qs here. And the Qs, very interesting stock chart. The reason I say that is because of the characteristics that are very well defined with regard to volume, and that's this. The Qs make bottoms with high volume. In fact, the larger the volume, the better off it likely is that it's going to make a bottom. When that fails, then it's a failed pattern. It doesn't fail too often out here. But the Qs, if you take a look at the Qs here, when they were making higher lows, they were doing it with volume. April 28th was one. May 7th was another. The trading session on May 16th was another. Higher lows were being formed out there. What the Qs also do is they make highs, short-term tops, highs out there with light volume. In the last 4 of 5 trading sessions have been with light volume. Today, inside the Qs, 23 million shares. Today was not a holiday. Friday, volume, 22 million shares. Friday was not a holiday. On Wednesday last week, 20 million shares. It was definitely not a holiday. Tuesday, which was definitely not a holiday, June 3rd, 21 million shares. That pattern is a topping pattern. Now, what the Qs are trying to do is they were trying to get, and are still trying to get to 93.50, where they would form a 1.272 butterfly pattern out there. Light volume, that is suggestive of a market that wants to retrace. If we take a look at what's going on the 120-minute time frame here, we're going to take a look at the ES Mini. It's the same pattern inside the Qs, or the NQ is really what I should say. It's made a higher high. It's done it with less relative strength. Inside the ES Mini, you've got a bearish engulfing candle that says that that high out here that took place at during the 12 noon session, that high being 1954.75 is a very important high out there. So we're getting indications of a market that wants to either move sideways, pull back a bit, and I think what you should be looking for is setting up the long trade out there and let it come back to you and then hop aboard. Folks, thanks so much for being here with us. Tom will be back tomorrow. Tune in tomorrow, 9 a.m. Steve Rhodes, TFNN. Have a great day, folks. Take care now.
With the launch of